Dave Cole, CEO of EMX Royalty Corporation. My pleasure to be back on Crux again. Really appreciate that. And my even greater pleasure to be here with Fred Bell, CEO of Elemental Altus Royalty Corporation. And I must say we are both delighted to have announced our merger and move forward with what we believe is a truly great combination that will result in a mid-tier royalty company with a substantial asset base.
Gentlemen, lovely to see you together. See what I did there? Together.
Thanks,
right.
yeah.
We are here, and you made, the announcement of the week. Everyone's talking about it. We better start with, how did it happen? How long did it take for you guys to work this out, or was this a Tether thing? Do we go on that one?
Well, Tether played a role in it, but
Okay.
I will say that we've shared a director in the past.
Yeah.
We've shared an ethos in the past, and that Altus also started as a prospect generator, as has EMX, of course, which is near and dear to my belief in the business model. We've syndicated royalty purchases and gotten to know the team. The teams have gotten to know each other and developed a lot of respect. We see a lot of synergy in that regard. When Tether came in, that was the catalyst for us saying this is the right time to do this deal.
Right.
I'd like to hear Fred's perspective on that.
I think that's absolutely true, and I think we've been talking and we've done deals that we've completed before that are public, and we've actually worked on deals as well that we haven't completed in the business. So that's helpful, and I think the team knowing each other and getting to know each other through those over time. And then as Dave said, I think the big change on our side was having Tether coming in and having a really cornerstone supportive shareholder going forwards.
Yeah.
That actually, as you can see with this transaction, putting another $100 million in and puts the company on such a strong footing going forwards.
Okay, because I was again looking at your stock. Obviously, this year you've gone on a rocket ship ride. Great stuff after kind of years of sort of not
Trading sideways.
trading sideways. There's the phrase.
Yeah.
Okay, so what's been happening this year? Is it obviously you've got to look at your portfolio a little bit and say this is not necessary. And we'll get onto the deal, what it does for both of you in a second. So what's happened for you this year? What's worked?
So
what's been recognized?
in the EMX portfolio specifically?
Yeah.
So really strong discovery being made across the portfolio, which is why you own royalties. I'm so passionate about owning royalties. I want to be exposed to mineral rights. The best way to be exposed to mineral rights is royalties, because they have this thing called optionality that are embedded in them. Commodity price optionality, which is working in our favor right now, I might point out, but also discovery optionality. And that would include Diablios, where they just keep finding more silver and gold, and then the huge discoveries, plural, happening on the Timok license in Serbia, which is our flagship asset.
Yeah.
And then the royalty that we co-own, the one that we syndicated, Caserones in Chile. The Lundins are doing a fabulous job there of drilling, and they're drilling the best place to find mineralization, in pit drilling, high grade breccias.
Yeah.
We're really excited about that.
Okay. So, and Fred, but you talked the same thing. You've been hard at it, doing deals actually last week before this deal. Maybe this deal's stolen a bit of thunder from you.
Yeah, and look, we actually had a new royalty coming on at the beginning of this year.
Yeah.
With Allied Gold at Sadiola and our royalty covering part of that. So I think we're in a position where we had record GEOs, gold equivalent ounces. We also had that coming into a period where clearly the gold price been contributing to that even increased revenue. And then, as you said, 2 days I think before we announced this, we actually had, and very under the radar, but we had the biggest single acquisition that Elemental has ever made, Elemental Altus, and that was the Laverton royalty, adding to our existing one. And we were very quiet on that on the day, unusually, because we knew that there was something even bigger coming around the corner. But I think it's a great time to be putting the portfolios together, because
I'm pretty happy about that
really
Laverton.
hitting the stride.
Right. So you've got 10 paying, and so 10 paying royalties, 20 advanced development stories. You're at 7 and 11. That's how I remember it. 7 and 11. 7 payers, 11
Within
advanced.
1 or 2, yeah.
Yeah.
That sounds right.
Okay. Well, that's what it says in your marketing. Okay. So obviously coming together, giving this. We've talked over the years, right? And it's always been about scale, and it's like, can we be a week in one of these days? And it takes time to get earn the credibility, because I remember you when you started. Well, when you started, full stop. Actually, the cost of capital was tough. Competing against people with bigger balance sheets than you was tough. And now this kind of coming together is kind of creating something, well, very meaningful. Very meaningful. So what does it do for you? I mean, what's it going to do for you in terms of competing out there?
The most important thing it does, decrease our cost of capital, increase the availability of capital.
Right.
And then because the portfolio effect takes over, the more tickets that we have, the more lottery tickets that we have, the more we're exposed to that wonderful thing called discovery optionality.
But what about rationalization of portfolios, the joint portfolio, is that something that may happen? Because you know what I mean, when you're individually, you may think, well, we need the long-term optionality there. Is that sort of in your mind, offloading?
Absolutely, we want long-term optionality and short-term optionality. It's
Right.
all to our benefit because we're not paying to advance those assets.
Right.
That's the beauty of owning royalties, right? We're not.
But
There's
you don't need the cash now.
tens of millions of dollars
Right.
in drilling money going across our combined portfolio a year. Probably pushing 100 million
Yeah.
in drilling money going across our portfolio. That's creating that optionality. Fred and I don't pay for that, and hundreds of millions of dollars in mine development expenditures benefiting us.
No, but I'm looking at the smaller long item royalties that you may have in there. Do you look to rationalize those? Do you
You
look
mean
to sort of
rationalize as in sell them?
sell them, monetize them somehow?
No reason to sell or
No reason to
monetize
sell.
them because those are the lottery tickets.
Right.
I remember David Hartwell said one time that some of their best royalties that they have today, 5 or 10 years prior, he didn't even know the name of, and that's because somebody makes a discovery on a royalty that you got for nearly nothing, or it came as part of a portfolio purchase. You're not going to get rid of that. It's a lottery ticket. Someone's spending money doing exploration work on it. Boom, it hits. You're happy.
Okay.
And I think it's very rare to see, just in a general sense, across the royalty space, it's rare to see royalty companies selling royalties because, as Dave alluded to, the holding cost is essentially trends to zero. And so why would you not want additional optionality? And if someone came to us today and said, I've got a whole portfolio of very early stage royalties that you can have for free and it will effectively cost you next to nothing,
Right.
you know, fantastic, because we've got optionality and you never know what will happen, as Dave said. And you know, you look across the discoveries today and some of the new discoveries, you know, maiden discoveries are never looked at, but then some that are the fifth operator coming in, and they make the major discovery that everyone else wrote off. And so, having more exposure, not less. I think it's probably not going to get as much attention in the portfolio because people are going to naturally focus on some of the big assets, some of the recent major discoveries, some of the big exploration successes. But actually, that tail, every now and again, one is going to raise its head. That's a surprise that probably people put no value on, and then we've got a whole nother story. And there's a good one example actually in the portfolio we have with Northern Star in Australia, and that's part of the Kalgoorlie you know, mine there. And there was a license with no resource on it, and they came out last year in the Hercules. They put a maiden resource on it, I think about 1 million ounces earlier this year, and that was something that if you'd looked a year ago, there was no resource, and a major, you know, a big company like Northern Star, they don't report the discovery as they do it, and they just come out of the blocks with $1 million maiden resource, talking about getting it into, you know, the mine plan going forwards, and all of a sudden, that has a real, very tangible value for us, and that was one part of one license that was, you know, completely no resource on it before, and we weren't even aware they were drilling it, frankly, because again, they don't talk to it.
Okay, so
It's a great example.
Let's look at the new company. I mean, it's got to get over the line. When are you expecting this thing to close?
Mid-November.
Mid-November. Okay. So post that point, what's the company look like? You two still there?
Yeah. Oh, yeah. Yeah. I'm looking forward to working with each other.
Yeah.
Absolutely. You know, we're going to have the top C-suite, David Baker, Chief Investment Officer.
Yeah.
Fred Bell, President,
Right.
Chief Operating Officer. And then we're really happy to have Stefan Wenger with his background at Royal Gold.
Right.
He was at Royal Gold from a couple $100 million to a few billion. He wants to do it again. We're doing it again.
Yeah.
He'll be our CFO, and I'll be CEO.
Okay. So, but looking obviously what happened when Tether came in, obviously the board was completely replaced.
No, so it's going to be 3 from Elemental Altus on the board and 2 from EMX, including Dave.
Okay. So
And in terms of the board, so we've still got at the moment as Elemental Altus, Prashant and Sandeep on the board as well, who were there before.
Okay.
So what we did do is we significantly downsized our board.
Right.
But I think if you looked at a relative size of boards to teams, we were almost getting towards a 1-for-1 at the back end of last year. So there was a point where we as Elemental Altus had 9 board members and 12 people on the management team.
Okay, understood. So I was wondering, so what was the deal with Tether then? Obviously, you, Juan and Ravi and the guys are sitting in what vehicle is that?
So Juan has come on as exec chair, and he's a direct representative of Tether.
Right.
And then at the same time, we had 2 nominee directors from La Mancha, and they sold their stake to Tether. So they both stepped off the board at the same time. And then we downsized it to 5 people. Okay. Which is sort of, if you think about the size of the team, 5-person board, 12-person management team.
Obviously, they've come and picked up La Mancha's position. And they what do they do for you, actually? Are they bringing some money in?
They're going to invest $100 million into the joint company at time of merger.
And is that to deal with some debt, or what are you doing with that money?
That's going to help pay for these good acquisitions that Fred has just made, and also pay off our $25 million debt to Franco-Nevada, and leave us with $50 million in the bank and no debt on a pro forma basis.
Okay, fine, okay. And in terms of their influence, I guess, desire from you guys, what's it do? Because I don't really know why they did that.
So they'll be at a high level on the closing. They'll be about a 33% shareholder, as it currently stands.
Right.
And then we'll have, as Dave said, about 50 million US in cash.
Yeah.
We'll probably have 70 to 80 million revenue on an annualized basis go forward.
Right.
And we'll have a credit facility completely undrawn that we'd like to upsize, and on the base of revenue probably get 200 million.
Because the thing people are talking about is obviously, wow, what an awesome type of money to kind of come into this tiny little space of ours. But specifically, why did they take La Mancha's position? What do they get out of it? It's not an equity investment that they're looking for, is it?
Yeah, look, I think it's a good question. I think to understand that, you've got to understand a bit about where Tether are coming from. And it's public that they have acquired about $10 billion of physical gold at the moment. Right. And they are continuing to acquire physical gold every week, every month.
And that's because of their business model in terms of...
And I think it's their belief that gold is actually an asset that will appreciate in value relative to US dollars, which is where their main exposure is. And so they're getting a huge amount of revenue from the yield on US treasuries. Yeah. And they're redeploying that into agriculture, into gold, and into Bitcoin as well, which they've done. Yeah. And I think on the gold space, if you look at what they're doing, buying physical gold in the market, the second safest way to get exposure to gold is through the royalty sector. Right. And one thing that I think is always surprises people is that you can go into the market today and you can buy physical gold at, and I'm not actually sure the price it's moved so much, but $3,600. Yeah. If you look at the long-term consensus gold price that analysts would use in the mining business, it might be $2,500. So you're saying I can go into the market today and I can buy $100 million of gold at $3,600, or I can put $100 million into an uncapped gold royalty that is valued using long-term gold prices of $2,500. And it might go for double the mine life. Now that's a really, if you're in their position, I think that's a really attractive proposition.
But that's not equity play. That's separate from the desire to have physical gold. This is a second derivative in terms of investing in the gold space. Otherwise, what are their options? Streaming? I mean, what are they looking at? Because I imagine it's quite hard to go and buy a lot of physical gold when you've got central banks competing with you.
Yeah, and I think for them it's an investment that they actually, and they've said this, they want to make a return on this investment. That's their plan. And
so
they're a shareholder.
Equity investment.
They'll get judged on the performance of the equity. And what they do have is, I think, a philosophical view on gold and the direction of travel, and that's clearly a constructive view, given where they're buying it today. And if you're sitting there in their shoes, and people have spoken about this a lot, but it's pretty hard for some people outside the mining industry to come in and invest wisely in developers and operators. Yeah. There's political risk, jurisdiction risk.
So you've de-risked that decision making for them.
Yeah. I mean,
that's our job.
That's your job. Okay.
And I mean, look at the portfolio today. Just to touch on that point, but we're going to have combined 16 producing assets. So that is more diversified than nearly all your mid-tiers and majors, individually mining companies you can get. And we've got another 180, 190 royalty exposure on top of that.
And what's the split between the precious and the base? And what are their views?
So right now on a revenue basis, 67% gold plus silver, most of that's gold. Right. And then 33% would be base metals. And that's on a revenue basis. On a NAV basis, it'd be weighted a little more towards copper because we have long-lived copper assets.
Okay. And with the new projects obviously coming through as well, you'd expect that ratio to stay together.
Which new projects?
Well, I'm saying like the advanced development stories versus the current payables, right?
So a number of those are gold and silver.
Mm-hmm. Right. Okay. Okay. Cool. Okay. So obviously you guys are all sitting on the board. Thanks for clearing that up for me, by the way. I just wondered where everyone was going. Who kind of manages it? You've got an executive chairman who's sort of new to the space, and he's very clear about his business model. But so, is it a board decision, or how do you bring ideas to the table? Because they've got the money. People outside have been asked all week, what do you think this means in terms of the money that you've now got access to, and the cost of that capital, but more importantly, where the heck that money's kind of directed to? How do you make the decisions at board level?
So I believe that we will cast a broad net. We will look at everything from early stage royalty generation up through royalty financings, purchase of existing royalties, portfolio purchases, all the way up to corporate transactions. We'll analyze those. We'll look at those on a risk-adjusted basis, and think about how to allocate capital astutely, and remain to our core ethos, which is value investing, as we build this portfolio with the overriding belief that the price of metal is going to go up.
Again, some would argue that, well, a few things. One, do you now start competing with a Wheaton or Franco Nevada of this world? Is that where the Tether connection puts you? Or does Franco value things differently?
So the interesting
from
thing, Franco still buys very early stage royalties, so we've been competing with them on those.
Right.
So you could make the argument, right? So they cast a broad net as well. And it's up to us, I don't mind competition. It's up to us to utilize the assets that we have, do the best we can, which we have a track record of doing within both companies.
I guess what I'm trying to work at is efficient change, because you've always said we've got to do the most efficient kind of acquisitions, and the direction of money is got to be a good ROIC for you guys. Does that change slightly as a result of the Tether money coming in? Can you afford to be a little bit more flexible?
Bigger arrows in the quiver.
Right.
Right. So we can hunt bigger game.
Yeah.
But we still like to hunt all the game. We like to understand the ecosystem, find the opportunities. Is that fair?
Yeah, and look, I think if to the fundamental point of your crux of your question, if Tether wanted to get exposure to royalties and build a portfolio as quickly as possible, they do not need us. They could go to every investment bank in town and they could outbid Franco and Wheaton by 10%.
Right.
And you would pretty quickly in a year probably have a multi-billion-dollar portfolio.
Right.
And they haven't done that. What they've done is they've identified smart management teams with experience and also track records in the business.
Yeah.
And then they're combining the best of them into a portfolio and a combined company that can actually look at, as Dave said, larger transactions, larger opportunities, which ultimately means, in a geological sense, bigger systems, bigger endowments, and so that's where we're going.
Okay.
Well said, Fred.
We've established this kind of competition, but it's also a period where gold price 3,600. It's fantastic. Producers don't need money from anyone. In fact, they're also making acquisitions of companies, which will mean that those companies don't need anyone, because there's a lot of cash around. So I think we've talked in the past. So you need a sort of depressed gold price to go out and maybe find the deals, don't you?
Well,
so what do you do?
I've always believed in being countercyclical.
Yeah.
You've heard me say before, use the cycles to your advantage rather than be used by the cycles. We understand the cycle's moving up, so that puts us in a different set of challenges. We've been there before. We can manage that.
Yeah, but it's kind of sitting around, isn't it? A lot of sitting around. Are you going to get deals done?
We don't sit around a lot. We're always working hard uncovering stones with royalties to buy that are not going through process, or better understanding the aspects of optionality within a royalty that is going through process, so we know that where the hidden gems are within that.
Okay.
And maybe, that goes to your earlier point, Matt, when you were asking about the 150 plus early stage exploration royalties. And actually, one of the great things you see in a market where companies can raise more money is it encourages exploration. It encourages those projects to get progressed. And so actually, across both our portfolios combined, what you've actually seen over the course of this year is more money being raised to advance some of those early stage projects.
Yeah.
And the acquisition we made at the beginning of this week is a great example of the gold price having been a catalyst on a corporate transaction. So Aussie mid-tier miner Genesis acquiring the Laverton project from effectively Shandong, the Chinese owner. And that had been something that many companies had tried to unlock in Australia over a multi-year period. Right. And I think the combination of the mine next door restarting and the gold price is probably what helped unlock that opportunity.
Right.
And so I think it probably adds a lot of value on the organic side. But then also that ties into one of the benefits that's always been there of the generation model is you're generating all these opportunities and projects. And so that's a good way to compete as well.
Right.
When it's in a bull market.
Right, it's been a bull. So you're going to, I hear what you're saying, but I'm kind of waiting for the money to actually genuinely cascade down to the smaller companies. When you talk about smaller companies, you're talking about early stage development companies?
Explorcos?
Or are you talking about Explorcos?
Both.
Okay.
Yeah.
And do you think that's happening? I'm not seeing it.
Yeah, I think it's happening. Yeah,
Explorcos
it's definitely been a bifurcation between metal price and the capital markets in this regard.
Right.
But now, after a prolonged period of gold price betterment, we're seeing money flow to the smaller companies.
Right. Why do they need you?
Oh, well, we're actually selling projects to them as part of our royalty
Right.
generation side.
So
right?
that's this kind of
So
smaller
you're talking about
revenue
need
side
us
of your
in
business,
regards
right?
to royalty financing opportunities.
Yeah.
Yeah.
Well, a bit of both. I'm trying to say, where do you spend your time? If you, I know, okay, I can be facetious at times, but
No, it's okay.
It's just to say, right, come on. In markets like this, it's great, but it's also, as you said, David, it's got its own challenges. So, where's the best use of your time?
Can I give him an example?
Yeah,
I'm going to give you an example. So let's say that we already own
Economic geology 101 this is gonna be.
we already own a royalty in a particular area, or we've identified an area with a lot of endowment that we like. It's prospective, right?
Yeah.
So we go in, we'll do the land position. We understand who owns what. We do the best we can to understand where all the royalties are within that and who already owns those royalties. And maybe some are not owned by majors, et cetera.
Yeah.
Then, of course, we're layering in the geology. We're layering exploration results, resource outlines. We're laying in permitting status. We're understanding what the social and environmental risks are within that and tear apart that as we put that into a big GIS so we can better understand that. Astute business decisions are rooted in solid technical understanding, so we do that technical work first. Now, we look at that and say, oh, there's an opportunity to stake claims here. Oh, there's an opportunity to buy a royalty there that's early stage, but we can get it cheap. Oh, here's an opportunity to help this person that needs money to advance that development asset. We can do a royalty financing. We're trying to look at it holistically, all the opportunities. How do we extract the most value out of this region that we've studied? As opposed to saying, well, we're just going to go out and buy advanced royalties, or we're just going to do M&A. Or no.
Okay.
We start with this, the technical work, we put it together, and we think about it opportunistically.
Okay, so message is, like you say, like so many people asking about the Tether thing, it's like, message is, yeah, we do have access to money, but we're not going to be stupid with it. So don't expect anything to be kind of cascading down outside of our normal terms of business.
You know, occasionally we mess up.
Okay.
You know, if you don't occasionally make a mistake, you're not trying hard enough.
Right.
You know, you learn to ski by falling down.
Okay.
And but that being said, our long-term track record on both companies is to allocate really well.
Right. What's next is the question you guys always get asked immediately after you've done something magnificent, which is there are a few other kind of royalty companies rolling around who smaller, but have the same ethos that you do. Are we expecting more?
Well, look, I'd almost turn it and say what's next in terms of the company is probably the US listing on the corporate side,
Okay.
because we're in mid-September now. Mid-October, we're expecting to have US listing, and then this transaction closing in mid-November. And I think one of the really important catalysts, and there's a lot in the last week or two. There's a lot that we've been working on, but that listing is something that I think is going to make a really material difference for both companies. And in terms of our ability to talk to investors. And already since the deal's been announced, we've had a number of investors, funds, institutions who previously we would have been too small or too illiquid for, and I'm from the Altus side, reaching out. So I think in the very short term, we got some work to do in terms of preparing this transaction,
Sure.
in terms of US listing,
Yeah.
in terms of getting it to the deal. But in parallel, we're going to be working on deals, every day.
Yeah, look, I'm not trying to pump the prices up of the companies you may go and buy by saying you're going to go and buy other royalty companies. But at the same time, you're a certain size in the US with the US listing, right? So you appeal to a sort of lower level of funds there and generalists as well. But to kind of step up to the next level, if you have ambition or not to be a Wheaton or a Precious Metal, etc., you're going to have to make some pretty big moves. Or am I buying into a kind of long, creative kind of growth plan that you've got? What's the plan? What's the big idea?
I think the big plan is to not say either of those, but to rather, as I said, start with understanding the lay of the land and think about things on a risk-adjusted basis. And I'm happy to buy good deals for $200 grand, and I'm happy to look at $200 million deals that are well priced. And generally speaking, I would be biased towards buying assets over companies. In the 23-year history of EMX, this will be our third corporate transaction, so we're not against doing them.
Yeah.
But we want to be patient and do them when they make great sense, as this one does.
Right.
And I believe that this is your second. Is that correct?
Yeah.
In 8 years. So both of us are saying, look, we'll do corporate transactions when it's right, but we don't need to be in a hurry to do them.
But does this stop something like a Wheaton or a Franco coming in and buying you? You've been through one sort of defense mode already, because Tether's ambitions are somewhat different. You know, they are. Is that the defense mechanism?
Well,
in this?
Tether's going to have 32%, so no one's going to buy us unless Tether says yes.
Because they're not interested. They don't need the money.
They have a capital allocation problem.
Yeah.
They have a capital allocation problem. They're looking for ways to buy more
Deploy.
good assets to deploy.
Worth saying
That's
out
correct.
loud.
It's a fact.
You know, and Dave touched on it earlier with the, you know, in terms of investment criteria, but I don't think it's changed necessarily. And does it matter if it's an individual asset or a private portfolio collection of royalties or a public company? I think ultimately it comes down to the same thing, which is the quality of the asset. And one of the things that really makes this entity combined stand out is the quality of the cornerstone assets underneath it. And if you look at Timok combined Caserones, Carla Winder or Laverton, those are 4 assets that would sit in the portfolios of any of the mid-tiers or majors. I don't think anyone would question that. And I think that what you can do is you can go out and you know, we could buy a number of $5 and $10 million royalties. And I think that those are, in terms of organic deals, those are sort of singles, to use a baseball analogy, and they're good and you can keep adding them. But would it make a lot of sense for us to go and buy a portfolio of those and really focus?
Down to you.
Versus a larger, you know, cornerstone acquisition or something that is a, you know, really material deal. And I think that for that reason, we're going to keep looking the same way we have at the opportunities that really fundamentally make sense, and that's from a technical perspective.
Okay, so let me push it a little bit more, a slightly different angle. Okay, Tether own a third of the company roughly. Most retail investors will be saying, "Hey, dividend time, boys. You're making money. It's all good." You've got a view about what sort of acquisition appetite you've got and where you would spend that. Tether don't seem that concerned about dividend play at the moment. So how do you kind of play that to the market?
I think we'll communicate that within the next quarter or two.
Right, okay.
Well, look, the nice thing about being a big company, and we've been getting asked this question all year as Elemental on dividend, is that you're getting to the point, and clearly the commodity price has helped, where you have enough capital to cover your costs, to redeploy into new investments to maintain that growth, and then you have the ability on top to pay a dividend without inhibiting your growth. And we're absolutely combined
so there's the point.
in a position we can do that. And you know, in terms of, I think the crux of a few of your,
that's good. 10 quid every time you say that.
The point of a few of your questions really is
new revenue
around,
stream.
Is you know, and I think it's, you know, how the size and scale of the combined company with Tether's backing is it going to change our philosophy and approach to acquisitions? And again, I think part of being a public company is you are constantly getting compared to your peers. You're constantly getting analysed on every single deal you do and announce. And you know, the public markets and investors are going to judge you, and they force you to maintain that discipline.
Right. And last Tether question, I promise. Which is there any kind of agreement, gentlemen or otherwise, around access to more capital if there was something big that came along, an opportunity that came along, about the cost of their capital outside of the money that you're flowing yourselves? Or is that a discussion for a later date?
I'll let you answer that.
Well, look, I think Dave's a very persuasive guy, and I think if there is an asset that really made sense for us, and you know, Tether, everything they have done to date has been incredibly supportive, and it's, you know, you look back, they only became an investor in Elemental Altus 2.5 months ago.
Everyone's super excited. That's why we're asking these questions, right?
And so, you know, you look at what we have done to date in terms of the pace of deals and listing and then the combination. And I think it's safe to assume that, look, if there are really compelling opportunities out there, I think they would like to be as supportive as possible going forwards. And you know, part of the attraction, you know, for us as well is the best technical team in the junior royalty space, without a doubt. I don't think any investor would question this, is the EMX technical team, and that's been proven over a long time. And I think that experience and that coming, you know, into the combined company, that really helps us in terms of evaluating opportunities. And as you get bigger and you've got more capital to deploy, you're taking bigger bets. And you want to have even more confidence in what you're doing. And you want to make damn sure it's a good deal. And I think that the combined companies and the teams and the experience is going to give us the best opportunity to do that.
And it's a bit late in the day, but I think you finally become a poster boy for the sector, Dave, and Fred, welcome to the club. Everyone wants to be you guys at the moment, so congrats on...
Let's make sure we execute
both deals and keep executing. Good to see you.
Thank you.
Cheers.
Thanks for
being
here.
Cheers,
Good to see you.
Thank you.